And continuing the trend of strong earnings for oil and gas companies, IndianOil Corporation posted strong set of earnings today, beating the street estimates on all parameters. Joining us now to talk about is B. Ashok, the chairman of IOC. Mr. Ashok, good to have you on the show, and thanks for speaking to CNBC TV18. Let me start by asking you about your gross refining margins. What are the core GRMs excluding the inventory gains for this quarter?
Yeah, basically, our GRM for this quarter was $9.98. But if you back out the inventory effect, our GRM is actually 3.56 as against 5.99 during the same quarter last year. But this is including Paradip Refinery, which has not been stabilized. So if you back out the Paradip Refinery effect, then we have a GRM of $4.5 per barrel as against 5.99 for the last year. Essentially, GRMs have been under pressure because the cracks of both MS and HSD have not been too good. So if you look at Singapore pricing, the GRMs of Singapore, there has been a drop of almost $3, against which our drop has been $1.5. So we believe that we have been doing quite well considering the market scenario.
But Mr. Ashok, why haven't we really been seeing volumes growing in line with the expectations of the market in the current quarter?
Volumes have grown during the current quarter as well. I mean, there has been an improvement in the sales numbers as well. If you really look at the domestic sales, I think we have grown by about 5.3%, which is a reasonable growth, I would say. Definitely, we have not been under tremendous pressure in terms of the growth rates. We have been maintaining good growth. And going forward, I think with the economic growth also expected to be quite robust, we believe that this sort of growth should be sustained.
All right. So talking about the future projection for the company, Mr. Ashok, what are the expected GRMs for the full year?
Well, I wish I knew the answer for that, but you must recognize that there's a lot of up and down movement of the crude oil prices. So because of the volatility, I mean, we have been going from a period of inventory gains and to some extent inventory losses as well. But our expectation is that unlike the last couple of years when we have had heavy inventory losses, hopefully since this year we expect the crude oil prices to be range bound, and due to which our inventory gains or losses would either get nullified or it will not be a very significant impact. So we believe we should be doing quite well.
So yes, you pointed out on the inventory gain side, it is at about 5,256 odd crore rupees versus a loss in the Q4. Are the inventory gains really going to continue in the coming quarter as well, Mr. Ashok?
No, as I said, it's a difficult call. I mean, nobody can really predict what happens with the crude oil prices. We had seen some amount of drop even during August, during the beginning, but towards the latter half of August, we saw firming up of prices. Again, we are seeing a little bit of drop. But only thing is the volatility which we have seen in the earlier couple of years where there has been a sharp drop, I mean, that has not been seen. So it has been moving up and down. So we think that the overall impact should not be very significant.
And finally, Mr. Ashok, how much volume guidance can we expect for FY17 as well as FY18 from IOC?
We think we should be growing at the rate of, 5 to 6% at least. That's our current expectation. Maybe FY18 could be even more robust, considering that the economic activities would pick up substantially. So we should be able to grow more.
All right, Mr. B. Ashok, thanks so much for joining us on CNBC TV18 and giving us more details and color on your quarterly performance and the projection going forward as well. So that's IOC's result for you. Let's take it straight across.